The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Darrell Martin.
Good day, folks. This is Steve Rhodes filling in for Tom O'Brien, and welcome to the Nadex Bull Bear Binary Option Hour, where what we like to do is set it and forget it. This is the fantastic Friday edition, July 11th. Thanks so much for joining Darrell and myself. Our call-in number here is 877-927-6648, and we'll do everything that we can to teach you about the Nadex platform. Darrell Martin, how the heck you doing today?
I am doing fantastic. How you doing, man? Glad to have you on the show.
I am doing
We're
just
back on the show.
I'm sorry?
We're back on the show, so good to have you back here. So you co-host a lot with us on it.
Yeah,
so many things going on, so glad to have you.
Yes. Well, thanks for that. And right now, folks, we've got the Dow is trading out at, where'd it go? Dow is trading off about 35 points. He's trading at 16,879. S&P's down 3. NASDAQ Composite just won't give it up. It's up $4, trading at 43.99. Russell's off 3.5 points. Gold is back 270. Silver's off 3 pennies right now. Light sweet crude, that is down 98 cents out here. And, Darrell, now we're going to go fishing for some trades. Anything that you had on your list of trades that you were taking a look at this morning that we should?
Right. Right now I know we're both looking at a potential short on the S&P here, so adding into that one, right?
We are, folks. What I'm looking for here on the S&P, let me switch over to that chart out here, so you can, if you listen on the radio, your mobile device at tfnn.mobi, don't forget you can always follow us. You can see your charts live on your mobile device by going to the homepage of tfnn.com. The upper right-hand side, you'll see a little button, 3 smartphones on it, and you can click that. And the area, Darrell, that I'm looking at is 1953. As a level that if that's the area right now as a fight between the Bulls and the Bears. So in the ES Mini, if we can see a close below 1953, that says to me, and we'll take a look at a 30-minute chart here that I'm looking at, folks. Now 1953, let me tell you a couple things that I've got on my screen here. I've got a 30-minute chart over on the left-hand side, and the center 120-minute chart, right-hand side the 240-minute chart. And I'm using the signal boxes, the market profiles out here as one of the elements. And you've got 1954 is a potential support area for the ES Mini. We can see prices bounce down there. That level is held. It's the same thing on the 120-minute time frame, so it's nice that we've got some synergy there. And that's why I don't want to take a short trade inside the ES Mini until we see a break below that. The other trade setup would be holding support at 1953, and this thing could bounce to probably the 1963 level. And I don't know if there's much of a trade there, but it is Friday, and those would be the ranges that I would be looking at. Now, if we were to break 1953 and as far as expiration, it's really you've got to use your market screener to figure out what the best reward risk trades are out there. If it breaks that 1953 area, folks, what it ought to do is at least come back and test the swing point from the open of yesterday. And there was volume down there of about 276,000 contracts. That's on the first 30 minutes out here. The first 30 minutes of our session today, we saw volume move down with 245,000 shares. So it's not the same volume, but it's not too shabby coming right out of the gate. So if it can break 1953, pretty good chance that a visit of that swing point, somewhere between the 1945 to probably the 1951-ish would be the area where it would travel down to. But I'm not going to worry about the 1951. I'm going to assume that it would go and move down to the bottom of the swing point. So with those two trade setups, one bullish, one bearish, are you finding anything that makes a good reward to risk trade on the market scanner?
All right. Well, for the short side, looking, we got a couple different options here. And, we have one for a short time frame. Pardon me there. basically you're assuming, hey, if it drops down, it ought to go pretty fast. So this is the one little thing you got to figure out. Anytime you're trading options, right, you got time to consider.
Yeah.
So the nice thing is this will automatically drop off the old expirations and add the new ones on. So every hour we'll be getting the new ones automatically fed right into the scanner. That didn't happen on Nadex. You have to manually refresh it. Okay?
Yes, yes.
On the actual platform. And so over here, looking at our risk reward, looking at where everything's at right now, we got one at 11 a.m., but, it's $40 risk, and I got ones at, 12 o'clock and even 4:15 that have similar risk.
Okay.
We have the one right here that looks really good. It only has a $15 risk, which looks amazing, but it's about 2.5 points below the market, which isn't really a horrible thing, because 2 points down is like 1953.
Yeah.
But we're going much lower. Okay, we're going down to like 1948. Okay, so 1948 would be a $50 profit on about a $10 risk on the trade. So that really would not be a bad trade for a 12 o'clock expiration if you're going for that.
Yeah, it's got to take out 1953. I'm going to just switch over to a 10-minute chart here real quickly. In order for that trade to work out, it needs to take out 1953. Interestingly enough, when I put up the 10-minute chart here using the TAS market profile, it's got 1953.70 as its support. Now, I'm using 1953 for another reason, but when things line up like that from multiple systems, that tells me just how important that 1953 area is. So, again, you got two sides of the trade. You got 1954, 1953 holding as support, and then you can see a bounce up to the 1962 area. And then I'd want to take the trade off, somewhere between 62 and 65 is what I would be looking at.
Oh, you'd be able to take it off at 19. Oh, on the upside.
On the upside, yeah.
Yes.
Yeah, so there's really two trades that I'm looking at that provide. That's two trades with inside, using short-term time frames, obviously, inside the ES Mini. Yeah.
Well, I basically have two choices. Very easily, I can narrow it down to two choices for you.
Okay.
This proximity looks big right now, but when we get down to that 1953 area, it's going to be, it's going to be closer to being in the money. Okay.
Yeah.
Because right now, when we look at the market, we're at 1957, right?
Yes.
So looking at that and going, okay, wait a minute. Well, the ceiling of this thing that we're looking at, this really cheap one, okay, is 1955. So we're 2 points out of the money right now. That's why the proximity is so big.
Well, let's look at the other side here. Then probably the better reward to risk trade is trying to put on a sell at 1966, 1965, 1962, somewhere in that range, 1961, and sell the ES Mini, and with it finding support at the 1954 level, 1953.
So do a sell or a buy?
Let's do a sell it. Now, I would sell it at 1963.
Oh, wow. Okay.
Yeah.
So basically, as it pops up and hits resistance.
Yeah.
Okay.
Exactly. Yeah.
Okay. Well, that would be a ridiculously low risk trade.
Yeah. No, it'd be good. That'd be a good trade.
$8. Now you only have till 12, so we have a level of risk. So you get about an hour and a half for it to come on back down and get at least to 1954 for you to be profitable on the trade. Every tick after that, you're going to make some money. Now, as it keeps moving up, there's some other potential trades. You can sell higher. We can sell at 1957. We do take on some more risk, but we're very close to the market. We're only a point away from the market.
Yes.
Okay. So I probably honestly like that better. It's sort of weird, but it's one of those things like you got to decide: do you want to take like distance risk on an option, or do you want to take dollar risk? And sometimes you have to choose between the two.
Sure.
And the difference there for those who are new to Nadex and Nadex spreads is distance risk is, hey, it's way out of the money, and so therefore, I'm only risking like $5 or $10 on the trade.
Right.
Which doesn't sound like a big deal until you start doing 10, 20, 100 contracts, right?
That's right.
So it adds up. And now the trade has to, the S&P has to move 4 points before you even get back your $10. This could be $1,000 if you're doing 100 of them.
Right.
So it has to move 4 points, 16 ticks on ES before you even get to break even. The other one, hey, I'm risking $30, so maybe I'm not doing as many, but I'm risking $30 a contract, but it only has to move 1 point, and I'm profitable.
Right.
So, a mere 4 ticks, and we're making money. So as soon as we get that little, run up and bounce back down, that's when it's like, hey, you strike on that one, and that thing's going to start coming into the money really, really quick for you. So for a shorter-term trade, because that 4 points becomes a bigger issue the longer you have till expiration, or the less time you have till expiration, right?
Yes, exactly.
The less time you have and the further it has to move, you're putting the odds against yourself.
That's right.
So I'd choose at least one of these two if I'm going to choose a short-term one, okay? So just depending upon, what's your flavor, like proximity or dollars. And then the other choice I would look at, and I actually like these quite a bit, and you'll notice right here, this is one of the really cool features of the scanner, and something that you honestly won't notice if you're just looking over on the platform, the Nadex platform, because it's pulling all the data in live where it does all the math for you, is we have two of these that expire at 4:15. They both have the same amount of time until expiration, okay?
Yes.
They both have the same amount of risk. S&P only have to move 2 points, and you're profitable on the trade. And looking at this right here, I can make $250 on this one or $350 on this one. So same amount of time to expiration, same proximity, same risk, more profit. Well, the reason is because this one started yesterday at 6 p.m.
Ah, okay.
And so it's a bigger box, okay? This one started today at 8 a.m. So it's a narrower box, but they have basically the S&P was at the same price, so it has the same floor and ceiling, okay? Or at least the same ceiling in this case. And this one has a little bit lower floor. See, it's 1930 to 1960. That one's 1920 to 1960. So there is no good reason that you would ever trade this contract.
Yeah. Yeah, that's cool. And you can only get that, folks, by getting Darrell's scanner out there.
And I cannot tell you how many times I've actually come out ahead because of using this.
Yes.
Not picking the wrong spread, going, oh, wow. And sometimes I'll see like a $5 difference. And I'm like, you're telling me, one day I was trading actually the NFP. And I was actually doing it from my phone on the scanner, okay? And I was at my daughter's school, just dropped her off, and NFP was coming out. And I pull it up, and I found out I could actually do the 3 o'clock for the same price I could do the 10 a.m.s.
Oh, great.
We're talking like $2 difference. I'm like, you're going to tell me I can have, 5 more hours for $2 more? And, it paid off like in thousands of dollars to me.
Yes.
So, it's, one trade pays for the thing for the year. You got to get, one trade right. And, it went up and I made some money, but it just kept just moving up all day long. And I was able to capture that because the scanner helped me see that.
Yes.
But, looking at these right here, do you want to have till 4:15 to let the move happen? Put a little bit more money up? That'd be like putting like $250 in risk, about 5-point stop on S&P. Okay.
Yeah, we're in a fairly narrow trading range as we speak right now, and I'm just looking at these. It would look to me at this stage at 1965 level is likely going to hold as a resistance. 1965, 1966 in that range, and I know that there's strong support at 1953. So that could end up being the range for the day out there, and then that's where you can just identify the best potential trade setup.
All right, we'll pick it up when we get back.
Absolutely, folks. Darrell Martin, Steve Rhodes. This is a Nadex Bull Bear Binary Option Hour. Thanks so much for joining us. Right now, we've got the Dow off about 4 points, flat in the S&P's, Nasdaq 12.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box.
For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, to the Nadex Bull Bear Binary Option Hour. Your hosts, Darrell Martin. I'm your guest host, Steve Rhodes, filling in for Tom, who is away for the day out here. And, if you're a fan of the of Ron Popeil's Pocket Fisherman, which I am. That's what the Nadex platform is really all about, because you set it and forget it. Of course, I don't think it was the Pocket Fisherman. I think it was his rotisserie chicken thing where he would set it and forget it. And that's the beauty about the Nadex platform, because, you've got your trade in, your stops are in, you can go out, you put the trade on, go golfing, go fishing. In fact, what you can really do is you can listen in on Darrell's show from 1 to 2 each day here at TFNN. He will teach you how to fish for trades. So let's go to Mike in Dallas, Texas. Mike, thanks for calling.
Got a quick thing. Hey, Mike, hold on 1 second here. Got a trade set up for 1953 potential sell on a binary.
Okay.
On the S&P 500, so you could sell this for about $80 right now. If it does drop down, we have till 4:15, so we get all day to stay within that range that we've already been establishing at 1953.
Okay.
So there is a potential trade. I'll look for a hedge trade on the other side for us as well.
Okay, perfect.
But a nice low risk right there is a potential setup for a sell and then a buyback at 57. Okay?
Okay, good. Excellent.
Mike.
How you doing?
I was just writing down that information, Darrell. Listen, I was a little bit lost yesterday morning when the market went down so fast, and it was so far below settlement pricing. Does that, or how do you look at the deviation levels when you have a market that has moved so drastically? I mean, we got down, Darrell, almost to a -2.
Yeah.
And it just do you look at the deviation levels just like if the market? I mean, does it change the deviation levels when you have the market that has moved as much as it did yesterday early morning?
What happens is it basically is just based on the fear that's built into the market. Because we pull the implied volatility, the expected move, every evening. So at the end of the day, after everything's said and done, because we got that fast and furious move down to 1.5 deviations on S&P, and then it pulled back up 1 deviation from there. And so whenever it does that, I mean, that it depends on how much fear is left inside the market. Is it all afraid that it's about to blow up, or what's going on? If it is, then we'll see an expansion of the deviation level next day. If not, we'll see a contraction of the deviation level the next day. So like yesterday, I'm just looking at the deviations right here. We had a settlement there. Take that down to here. About 15 points was 1 deviation. Today we're at 16 points on the deviation level. So it did have a little bit of an expansion on the implied volatility. There was some increased option buying that took place. And so that did drive it up a little bit. We got a 1-point increase in, but that's not that much. Also, we're on a Friday, so just take that with a grain of salt. So a lot of times we don't, after having those big move days, multiple days in a row, we've had some great moves this week, then I would not be surprised to, see the market sort of, maybe do like a +5, -5 deviation today, back and forth.
Okay. One other thing, I had never traded the pairs ever. I didn't know anything about pairs. And but I've been trading.
You mean like Forex spot option or Forex spot pairs?
Forex pairs, like what you talk about in your classes. And it has just been fantastic for me. Your levels and the news trades. I've never traded news trades till I started working with you, and they have just been great with the currency pairs. And I just wanted you to know that.
No,
you're right
awesome.
on. And this morning was just great with the CAD.
Yeah, so you took advantage of that one.
Oh, I did. It was just perfect. I can't believe it. So anyway, I just wanted to let you know that.
That's awesome.
And thank you for all your efforts.
Well, thank you for calling in. I really appreciate it.
Okay. Bye, Darrell.
Awesome. Bye. Have a great day.
That was Mike in Dallas, Texas. You can't get better calls than that. That's a good way to start your weekend, isn't it, Darrell?
It is, yeah. So he's talking about whenever I go over the news every day,
Yeah.
And I lay out an exact trade plan. Like, this is how much I'm going for. This is my risk. This is my reward. And I give it a day in advance. Sometimes I give it several days in advance. And so he's paying attention, taking advantage of it, writing it down. And it's great to hear whenever people are talking about how well things are going. So I love it.
Absolutely. Let's see. Right now, folks, the Dow's off 11 points. Flat market, the S&P. Nadex up 9. Gold's off $3. We'll go take a look at gold. Silver, well, we'll take a look at it when we come back. We'll go take a look at light sweet crude. That's off $1 right now. This is Darrell Martin, Steve Rhodes, TFNN. Thanks so much for joining us. This is the Nadex Bull Bear Binary Option Hour. We'll be right back, folks.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, to the Nadex Bull Bear Binary Option Hour. Steve Rhodes and Darrell Martin here for you. You give us a call at 877-927-6648. And, folks, if you have not had a chance to test drive the Nadex platform, if you come over to the homepage of TFNN.com, over on the right-hand side, you'll see a banner. You sign up. It'll set up a free account for you to test drive and test. Put some funny money in there. And then you've got Darrell's shows. He does a program for us here at TFNN every day, 1 to 2 p.m. Those shows are archived on channel. What channel are they archived on, Darrell?
Channel 7.
Channel 7. Hey, and it's July 11th. I think we ought to go to Vegas and hit the craps table.
We should. And I got to do something else today, too.
Yes?
It is my mother's birthday.
Ah, perfect.
Yes. So
perfect.
When I wish my mom happy birthday, so I'm going to tell her on every show.
Okay, that's good.
But yeah, I'm actually the whole family's going to take her out tomorrow, but I'm going to take her out tonight on a little date. So it'll be fun.
Ah, okay. Yeah. Oh, that'll be great. That'll be great. Hey, yeah. Before we went to break, I mentioned light sweet crude, which is trading down a buck right now, trading out at 101.85. And let's take a look at what light sweet crude is doing here in we'll use a couple of different tools out here. Right now, I've got the current September contract up on my screen. And if we take a look at coming off of the low down here, January 13th, what I've drawn in here, folks, is a little rising price channel. I tried using what you're really doing is using the body of the candle. Doesn't matter whether it's a open or a close. You're trying to find the largest number of co-located. By co-located, I mean, it doesn't matter whether it's an open or a close. So the largest number of bodies that you can connect. Interestingly enough, right now, light sweet crude has its back up against the wall when we take a look at its rising price channel.
I got a question for you. Are you already on September instead of August?
I am. Yeah, I've got both contracts up on the.
Okay, I was about to be like, you're ambitious.
Yeah, no, I've got.
All right, cool.
I've got both, and I'm going to switch over, but I've got both contracts. As we can take a look at out here. So I'll put the August.
Awesome. Okay.
Yeah, I'll put the August. I'll put the August on the screen as well. Now, in the case of the August contract, we can see here is it's broken through its rising price channel out there. So light sweet crude has got its back up against the wall. That's taking a look at levels that have acted as support in the past, and that's utilizing that tool. Now I'm going to switch over, and we're going to go take a look at the market profiles, and we're going to look at the market profiles and take a look at it on 3 different time frames, folks. So if you're watching this on Tiger TV, I'll go ahead and expand these out. But the left panel here is the 120-minute time frame. So we want to kind of dive down inside and see if light sweet crude is breaking through support areas or where those support areas are. We'll take a look at it on a 2-hour chart, a 4-hour chart, and the daily chart. So let's populate the 2-hour chart right now. You can see the significant downtrend that has been in place here, that was established as market profile support areas began to get busted. The first one was busted back at around 10 a.m. on June the 23rd out here. Today, as we speak right now, you can see on the 120-minute time frame. I'll zoom it up here for you. You can see that price is right now traveling right against the level of support. So we had support on its rising price channel. We've got support with regard to a market profile. Tells you on the 2-hour time frame as well as that daily chart just how important this 102 area is. 101.84 is the exact price point on the 120-minute time frame. So I would write that down, 101.84. Let's go see what the 4-hour chart shows us here. And the 4-hour chart shows support at 101.76. So you've got a nice little market profile out here showing us a level of support as well. And that's, where you want to really go ahead and pull these things together. So that's where you've got support. So we've got support of a daily rising price channel. You've got support on a 2-hour and a 4-hour time frame. Clearly, when we go switch over to the daily chart, which I'm going to do here as we speak right now, the daily chart has shown us that light sweet crude is now broken to the downside. It's trading into a swing point back on June the 5th, and that says that the low of that swing point is very important. That low is 101.17. So now we're between an area of 101.17, 101.76, 101.84. These are the areas, and see how it's nice to have a little cluster of levels of support. Now, that's a swing point out here because clearly what the daily chart for light sweet crude has done is gotten below its market profile support level. That's at 103.48. It actually says that any bounces inside light sweet crude, the real key is going to be what happens should, in fact, light sweet crude hit that 103.48. Does that now start to act as resistance, whereas on the way up, those areas act as support levels out there. So light sweet crude has its back up against the wall. I don't know that the trade is today on this, but certainly from a Nadex platform trade here, I would suggest that you take a look at light sweet crude, start looking at it Sunday evening, Monday morning out there, because you've got levels. If price is breaking below these areas, that tells you that this change in trend that we're seeing take place here on the daily basis. In fact, if we're looking for areas where price could pull back to, just to give you an idea out here. And so right now I'm in the August contract. If we take a look at retracement levels for you, if we come off of the low to the high, the 100.72 is your dead cat bounce, your 0.382 retracement level. But since that would really be taking out the June 5th low, 100.93 on this, what we would be taking a look at is a move down to probably the $96 area. So that's what I would be, Darrell, that's how I would be setting up, looking at, it's nice to when you can find something with its back up against the wall, and then take a look at it, in my opinion, take a look at it on multiple time frames out there and look for synergy I guess that's the best term that I can come up with for it, because we know that it's a spot where you could take a long position. And if it cracks that area, you immediately know what your action is, which is to flip and take the short side. And really, folks, whenever you're trading, I believe that that's really what you should always be doing. And you should be doing it each and every day as you come back to your charts out there. It doesn't matter, what the reasons were that you entered the trade yesterday. The question is, if you started with a clean slate, a clean palette, would you enter that same trade today? And if things have changed, then you need to, maybe take some corrective action. So that's what I see on Light Sweet
Follow the charts and don't try to be right. Yeah, exactly. So
yeah. Anything that you're seeing now, when you take a look at the Nadex platform or any of your deviations or anything that news-related events, anything along those lines that would impact how you would take a look at Light Sweet crude?
Looking at crude right now, we're actually at the 1 deviation level.
For the day, okay.
We've been sitting at it since about 9:30. So the 1 deviation level there was at 101.82. So
okay.
That's pretty much just where it said that the market was going to chill out and stop, and it did.
Yes.
So and so the nice thing about that is that if you were short, that means this really probably is the time to, at a minimum, tighten your stops.
Yep, absolutely.
Okay. Potentially, go ahead and take some profit. That's one of the things. I know. Pesavetta talks about that. I mean, that's the big benefit of doing multiple contracts on a trade, is that you can take off some of them. So it might even be a place where you look to take off some. I mean, hey, it may drop down. We may get a 2 deviation move. I don't see anything news-wise that's going to drive that today.
Right.
I think we'd be more likely to go flat or probably rally back up to about 102.38 before the day's over. Yes. On oil at this point. Now coming into next week, I could definitely see if we start getting some volume back down. Moving on down to 101.75 and pushing on back down to those levels, but
that's what's actually kind of cool. That's what I was saying with your back being up against the wall on these multiple time frames up here. The parameters start to become pretty easy, in my opinion. They
you have to focus.
Easy.
You really got to get in there and got to go. Okay, what exactly am I going to look at and target and stuff like that. It's sort of like going, okay, well, I'm going to target 1953 on S&P.
Yeah, and we don't know which way it's going to crack, whether this is going to hold a support or it's going to crack and move to, so we're always poking. We're poking to find out. But it's so much better to be able to take both the long and the short side of the trade, knowing where you're at when the support areas hold and if they fail out there, and versus being in the middle of a move. Because it's much easier to do it now. So folks, this would be an excellent time for you to come over to the homepage at TFNN.com in order to try the Nadex platform. You'll see a banner over on the right-hand side. Click on that. You'll be signed up for an account. It takes a good 90 seconds. Or if you're slow, it takes maybe 180 seconds, or maybe if you really maybe 300 seconds. How about that? You can certainly get it done in 5 minutes out there, and that's really what you should do. And then you can begin trading the platform, and you can listen to Darrell's show. You can give him a call today at 1:00, and he'll help you to identify and put some trades together. As we take a look at the general markets here right now, Dow's off 32, the S&P is off a couple of points.
It broke back below settlement, though, so hopefully it'll keep on going there. So.
Yeah. Well, look, the market. We got our first signal in the market on Monday. Give me a moment here. I'll put the chart up on the screen. And so on Monday, let's take a look at the New York Stock Exchange. We'll put that over here. Give me a moment to find that tab. We're going to look at the daily chart for the New York Stock Exchange. And we'll take a look at a couple different things, folks. But on the daily chart for the New York Stock Exchange, which is the market breadth for the wide swath of the market, what we saw was, number one, we saw a bearish candle. So when I was doing the show on Monday, as we were kicking things off, one of the things that I noticed was that the open of the New York Stock Exchange was really, and I called it a gap down, and just simply because of the close on Thursday's session. We did have a shortened trading week. That in order, and it takes a lot of power, it takes a lot of energy for a market to, in essence, open up the following trading session at the open of the prior session, especially in a candle that had moved up. In any event, that is a bearish reversal signal. But that was just the reversal signal What happened on that trading session is there was enough net declining issues to move the price oscillator. That's the very bottom of my stock chart. Move that down below the zero line. And when you move down below the zero line, it's like watching a football game. It tells you who has the ball. In this case here, was the Bears that actually got the ball out there. Some Asian index ticked down. We've seen that continue to move lower out here. Very likely what we're going to see is we're going to see the New York Stock Exchange at a minimum go test the 10,821 level. Gets below 10,821, that says that this hammer candle, this little consolidation low, there's multiple areas of potential support, and that's at the April 15th area, and that's at 10,271. And that's what I actually expect we're going to see. I expect we're going to see a scary move down here. May not happen today on Friday, but just like yesterday was another indication that we're going to see some scary, fast moves down in the marketplace. And actually, I'm saying that's when we get that's one that you want to buy. But I'll wait. That's my game plan that I have on paper. But I'll change that game plan when I have more information. Should in fact that take place. So inside the New York Stock Exchange, we got a message here that it is ready to start at a minimum, at least doing just a natural and normal retracement. We got other signals in the marketplace as well this week. If we take a look at the semiconductor index out here, we'll take a look at the SOX. The SOX here, this is a daily chart that we're looking at. This is utilizing my Ninja Trader platform. So I use eSignal to feed all of my charting services. And this has got one of Stevie's favorite patterns out here. It works on all different time frames. And this is the price relative strength divergence pattern. This is where price either makes a higher high or a lower low. In this case, it made a higher high, gave us a nice reversal signal out here, which was a nice big old bearish engulfing candle. That was on July the 7th out there. So we came back. The New York Stock Exchange on Monday gave us a reversal signal. Now, you're always looking as to what's going on in strength to help you understand, because strength, typically you're not going to have reversal signals out here. Now, yesterday, as price was moving lower, it was about ready to really confirm. We got a confirmation that the SOX is saying it too is ready to take a little bit of a breather and a little bit of a rest out there. So that's coming from also another area of strength inside the market, and that suggests to me that it also wants a lower price. Of course, we're coming into a full moon. Darrell, we got to get you to come up with a full moon Nadex strategy, full and new moon Nadex strategy out there. And I believe we've got a full moon coming in maybe tomorrow or Sunday in the marketplace. Now, and then the reason why I say that is, folks, if I go take a look at the lunar system out here, I'll go ahead and pull up a full moon chart, new moon chart here in just a moment. Where is that little puppy? How about that? It used to be right there. We go. So we're going to take a look at, and the reason why I say that with a new moon, with the full moon coming, is these full moons typically act as a area of a short-term reversal. And if you take a look at, is it coincidence? I don't know. April 15th was where the market actually took off, and there was a full moon on April 15th. I don't know, Darrell. How's that work? June 13th.
I have no clue.
June 13th. Let's see. You'll never treat a full moon, the same way after you spend a little time with Stevie's son here. So the full moon on June 13th, man, created a little bit of a market low out here. Even this new moon that took place on June 27th created a nice little low. In this case here, it actually, ephemeris time came in on June 26th out here. So we'll see. We'll see. Yeah. Folks, this is Darrell Martin, Steve Rhodes. Our call-in number is 877-927-6648. Dow's off 20. S&P is down a point. Darrell and I will be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks, to the Nadex Bull Bear Binary Option Hour. Dow's off 17. S&P is flat out here. And Darrell, we had a question inside the den a little earlier asking about the deviation levels that you create out there each day. Can you explain to our listeners a little bit about what you do when you're creating those, how you're using that, and so forth?
Well, the nice thing is now I have it automated. I used to have to manually pull it up and manually calculate all of them out.
Yes.
It was a very long, tedious process. You can even see old screenshots. How it went from, Excel to, a screen, and then now I have the screen automated up in the the spread scanner section over on TFNN.
Automation's a beautiful thing.
Oh, it is, yeah. And so what I do is I go in and I pull out 3 months, sort of like a VIX formula. I pull out like the next 3 months of implied volatility options on the calls and the puts.
Yes.
And so that way I balance it out, because you get front month that can be just, like haywire, and you get the back months which can be too low, and so just put the whole average in there.
Yes.
And so I average out the calls and puts that are at the money over the next few months. When I get all those in, I pull it that implied volatility, average that out. I then tie that into basically a standard deviation formula for a day.
Yes.
Except for I'm not using standard deviation because I'm not using historical prices. I'm actually using, implied volatility for expected future pricing, and tie it in. And it's basically the summary is, for those who are new to what implied volatility means, is implied means expected, volatility means movement. So it's expected movement priced into an option, and how much somebody's willing to pay for an option is how far they expect it to move. Okay.
Yes.
And so that payment is built in, and so what we do is we extract. It's all formula based, but it's extracted out, and it's insanely accurate, because what it is it's every market participant's agreement on the value of an option on that Black-Scholes type model.
Right.
And so everybody coming together, there's a consensus on agreement on how far the market will move, and so we're letting the market tell us how far it will move. Instead of going, hey, how far did you move yesterday, and let's, past performance, future performance, how that whole disclaimer is everywhere else.
Yes.
Didn't quite work either, So it's like, why don't you tell us how far it's going to move? Everybody who's interested in trading, that is trading, that's putting their money where their mouth is, you tell us how far it's going to move. We listen to everybody, put that average together, and that's how they're spot on day after day after day after day. So it's something that was taught to me by one of my mentors, who was a floor trader of the CBOE, and he traded options, and he used to do a lot of arbitrage and things like that. And he'd just put trades on and back off and come back and put some more on, and nobody had any idea what he was doing. He was arbing.
Yes.
And he used this for like a gamma scalping type method, and which is a little bit more complicated, but where you're doing short straddles and you're going in and hedging them off, and or long straddles and hedging them off, depending on which way you want to do it. And but
hey, it's all in the math, baby.
Yeah, I got the idea of, well, if that works so well for that, then I wonder how well it would work if I tied it in for an expected movement on a day. And worked fabulously. So it came through, and we were able to go in and apply these every single day. And so I applied to all the Nadex markets just to make it easy. And it's been a beautiful thing.
No, it's great. And hey, look, there's nothing like having a little black box out there. In fact, it's better than that Excel spreadsheet, because you make one accidental error in a cell, and you get to replicate that real fast. So, folks, if you'd like access to Darrell's little black box out there, come on over to the homepage of TFNN.com. You can test drive his services as well. He's got the show each day from 1 to 2 p.m. as we depart for Friday. Darrell wants you to have a fantastic weekend. I can tell you that the Chapman Wave, Basil Chapman, he's coming up next. That means I've got my name, Stevie Son, etched in the beach. But it looks like it might be a beach whale. So have a great weekend, folks. I'll look forward to seeing you Monday morning. Darrell, have a great show today.
That sounds awesome.
Take care.
Have a great weekend. Bye.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.